now give you a sense of the very latest in the world of business. The local index faces weaker global markets this morning, with some dismal U.S. economic data weighing on sentiment and a recent recovery for global markets seemingly running out of steam. Makwe Masilela, Chief Investment Officer and founder at Makwe Fund Managers, joins us now to talk through the latest market news. Very good morning to you, Makwe. Thank you for your time. Give us a sense of how the markets have opened. Have the markets reacted to our electricity woes as yet?
Morning, Mpo. I think when it comes to load shedding, that can be seen when it comes to the rent itself, because yesterday it started to weaken, breaching the 16 rent level after the announcement was made. And remember, it happened on the day when commodity prices were firm and the rent was supposed to be benefiting from that. As we have seen with the likes of the Canadian, Australian dollar benefiting from that because they are commodity currencies. But as per the general market, the markets are mainly affected by the economic data, especially the one that we got from the U.S., showing that the consumer confidence was worse than expected. Even this morning, unfortunately, we opened 1% down, and also that we've seen that when it comes to the second quarter, the Chinese economy didn't grow as much as we thought. There has been a slowdown, all because of those prolonged effects when it comes to COVID-19 restrictions. And all eyes will be on the ECB forum, where we expect a panel of the Bank of England, the US Fed, and the European Central Bank to tell us how they will be taking inflation going forward. But already inflation becomes a very serious issue, and we expect interest rates to continue to be increased. We hope they don't do so in such a way that it gets to impact the real economy in a negative way.
Implats, Rustenburg and Marula operations have signed a 5-year wage settlement with the Association of Mine Workers and Construction Union. I suppose it's some good news from a wage dispute perspective.
Definitely, and I think that's what needs to be done going ahead. People should stop seeing themselves as us and them. They should see themselves as one, that they are the sector themselves. And it's good that they've managed to sign this before the other one expires. And it shows you that the guys, they are mindful that going forward, they don't think maybe inflation will go above 6.5%. Will hopefully doesn't do that. But yes, if even the guys manage to buy the Royal Bafokeng Platinum, that will also help them to secure employment in the area. But that's big ups. People should learn from that.
And the Mira Property Fund released a pre-close operational update. Talk to us about some of those takeaways from that release.
We know that the property fundamentals continue to be challenging, especially for South Africa, but the guys managed to still do well. Look at the total vacancies. They've been reduced to 5.5%. Look at their collections. They're sitting at almost 99.8%. And even when you look into their retail, which makes 49% of their total direct portfolio, the vacancies they're off at 3.3%. And only because we know that most of their retail centers are neighborhood centers and anchored by grocery shops. And we know that more than 50% of our people spend more than 50% of their disposable income on food. Hence, they continue to do well. But the office space, if you look, it makes almost 30% of their portfolio, and we see the vacancy rates at almost 16.6%. And because we know the weak economic conditions, the weak business confidence continue to make the office sector challenging. And the industrial part, which makes almost 19% of the portfolio, not doing badly because the vacancies are sitting at 1.9%, because we know the guys, they own your warehouses, the mini unit industrial parks, so we know they're more into demand. So yes, loan to value sitting at 42% is not impressive. A higher loan to value ratio tells you that you as a lender, you are standing a biggest risk should the borrower default, because when you sell that particular property, you won't be able to recoup your money.
Yeah. Motus Holdings has secured an environmental, social and governance funding facility worth 6 billion rand. What do we know about this acquisition and what it means for the Motus's ESG journey?
The guys are committed to that. Remember, 2 years back, the guys secured an international one worth almost 2 billion. So they're getting another almost 6 billion coming from Standard Bank. And I think 800 million thereof goes towards working capital. But the guys want to make sure that they contribute to the whole thing of climate change. They have to make sure that the likes of electricity, water pollution, and also gender equity tends to be implemented. So what will happen if the guys miss their key delivery points, then unfortunately interest rates that they get to be charged will go up, and if they meet them, then they'll get less interest rate charged on that particular loan.
Very well. Thank you so much. Let's leave it there for now. Makwe Masilela, Chief Investment Officer and founder of Makwe Fund Managers, giving us a sense of how the markets are faring today. Now